This is 95.3 Business Now.
Welcome back to Business Now. Nigeria's central bank on Tuesday approved a financial package worth 700 billion naira to support the proposed merger between Unity Bank PLC and Providus Bank Limited. This bailout is aimed at strengthening the stability of Nigeria's financial system, as seen in a letter from the Central Bank of Nigeria, which detailed the terms and structure of the financial accommodation. Well, let's get deeper insights into this now as we turn to Johnson Chukwu, investment professional and the CEO of Cowrie Asset Management. Good morning. It's good to have you join us on the program, sir.
Good morning. Thank you for having me.
Yes, Mr. Johnson, give me your first word on this move by the CBN, the merger between Unity Bank and Providus Bank.
I think the first thing that hit me when I got that information is that the central bank obviously has taken a position that they will support any bank in the system to ensure that there is no further revocation of license. Because I know that this major process was already worked during the tenure of the immediate past CBN government. So, but the revocation of license of Heritage Bank is a mixed signal on the possibility of the current central bank approving this measure, given that there was certainly going to be some level of support for this major sector. But with this announcement, I think the central bank has actually taken a cost reversal, and the approach will now be that we will support any bank to ensure that we maintain financial stability and there's no failure in the near future.
But are there main or major risks that might be associated with this merger, or if so, how can they be effectively managed, to ensure a smooth transition?
It always is one of those risks is that whether the parties have agreed on the share exchange ratio. There's always a dispute among shareholders when the share exchange issue is being discussed, because every shareholder, every of the legal institutions want to ensure that their shareholders get the best in terms of share exchange. That's always a very solid issue when it comes to sort of combination. But beyond that, I think the adjustments of 7 billion by the central bank to support this measure to a large extent smoothing some of the other challenges we would have had. Because with the 396 billion now qualifying as their two capital out of the 700 billion, that means the new bank, the emerging entity, will not need to go to the capital market or try to raise new capital at the time when raising capital will be difficult. And if they have failed, if they were not in a position to raise capital, assuming the central bank did not offer the lifeline, then they always do a category of bank affairs to raise capital to their well, the central bank is looking them or downgrading them from the national bank.
So talk to me now as a professional. What are your projections, for this merged entity in terms of growth, profitability over the next, in the near to medium term?
Well, I think that's a difficult thing for any analyst to guess. The reason is this: the profitability, the viability, and the growth of any entity depends on the quality of the entity. Right now, we don't know who will lead. Is it the current management of Providus that will consider to lead a new entity? Is it the current management of Citibank that will continue to lead it? They're going to have a mix of the management teams from the legacy bank to lead the new entity. And beyond that, you have to ask yourself, are they even going to go to the market and search for new leadership? The leadership will divide the decision and the drive towards achieving those decisions. It is when we have that clarity that we can say, based on the track record of the leader of the new entity, of the emerging entity, and begin to second guess how the success of that entity will be.
I noted you talked a bit about, the shareholders earlier. I want you to explain a bit further whether this is good news, for shareholders. What should they be aware of in terms of the potential returns or risks?
Well, in the first place, remember this entity will be bigger than the sum of the two, in the sense that they are going to leverage on the strength of both entities. They are going to have a much wider branch spread. Of course, we know that location is not just one of those key top cities then they will have a reach that neither of the two banks had. And I think one should expect among the shareholders that if proper leadership is empaneled, that the performance of the company will be much better than the performance of the entities. Like I said, the Unity Bank had a lot of presence in the north. It's patronized massively by the national resources of the country. Probably not the bank that has gone past very quickly in a short period of time. And I think a combination of both will create a north-south integration, and it will also avail them of customers from all segments of the country. But then what they make out of it will depend on the leadership they have.
I'm also very much interested in knowing whether, do you foresee this measure, how will it impact the broader Nigerian financial system?
Well, what I would say is that every good financial institution brings additional service options to banking customers. With the strengthening that will come from the merger of these two banks, I believe that the bank customers or banking industry customers have more options. It will also help in financial penetration because one of the things the central bank has been trying to drive is financial inclusion. So, like I said, the Unity Bank has a lot of local presence, and they will use this major opportunity to either penetrate a lot more of the nooks and crannies of the country where they already have competitive advantage. So, in terms of financial inclusion, I think the economy at large will benefit from it.
All right. Thank you so much, Johnson Chukwu, investment professional and CEO of Cowrie Asset Management. We appreciate your time as always on Business Now. Do have a great day ahead, sir.
Thank you for having me.
All right, we move straight to the markets, and we're giving you the summary of Wednesday's trading day. First, with the equities, the Nigerian equities market reversed Tuesday's losses, notching 18 basis point upwards as buying interest in Oando went up 10%, FBN Holdings 4.60%, Jitco also in the green 1.47%, Access Core 0.81% on the pin markets performance. Well, going across frontier African markets, we'll make a stop first in Cairo and check the Egyptian exchange, continuing its upward trajectory with a 1.48% uptake on Wednesday, while the Kenyan Securities Exchange Index fell by 0.73%. Here in West Africa, the BRVM Regional Exchange, that's in Abidjan, posted a 0.61% increase, but the Ghana Stock Market Main Index fell sharply by 1.34%. If we look into Southern Africa, the Zimbabwe Stock Exchange pulled back by 0.18%, while the Johannesburg Stock Exchange in South Africa went up 1.03%. So quickly, let's come back to Broad Street and looking at money markets right now, where overnight lending rates among commercial banks in Nigeria contracted by 5 basis points to 25.9% in the absence of any significant inflows into the financial system. We'll check fixed income very quickly. Trading in the Treasury bill secondary markets was negative as average yield expanded by 34 basis points right there, finishing at 26.1%. And trading in the FGM bond secondary markets were quiet, while the average yield closed flat at 19.6%. If we look quickly at foreign exchange and check the Naira, our local currency here in Nigeria appreciated by 0.3%, finishing at 1,596 Naira 52 kobo. That's against the US dollar or the American greenback in the Nigerian Autonomous Foreign Exchange Market, and that's as tracked via the FMDQ Securities Exchange. And then we check global commodity prices. Looking at oil, the prices edged higher on Thursday for the third straight session after government data showed a steep draw in U.S. crude stockpiles, rebounding from multi-month low touch this week. Brent crude futures rose 23 cents or 0.3%, finishing off at $78.56 a barrel, while the U.S. West Texas Intermediate crude gained 29 cents or 0.4% to $75.52 per barrel. Now, Brent tumbled to its weakest since early January on Monday this week as the WTI dipped to its lowest since February, hurt by worry over a U.S. recession and a sell-off in global stocks. U.S. crude inventories fell for a sixth week in a row last week, dropping by 3.7 million barrels to 429.3 million barrels last week. And the government data showed that against analyst expectation in a Reuters poll for a 700,000 barrel draw. Well, that's this Thursday edition of Your Business Now. Do have yourself a profitable day ahead, everyone. I am Aramide Folorunshaw.